We finally got some good news on the economic front. It's Friday, May the 2nd, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. You can also share it with friends, family, and colleagues. But we're here today to talk about the April jobs report, and it's the first Friday of every month, and the employment report can be a big market mover, and we're seeing that today. We got some good news on the labor front, so let's dig into this report. Jobs came out, the U.S. economy added 177,000 jobs. It was better than expected. The expectation was for 138,000. There were some net downward revisions to the prior months, but still at 177,000, it's a pretty solid report given that there were even some notions there might be close to zero or if not negative job print today. The unemployment rate stayed unchanged at 4.2%, so still very low from a historical standard. The labor force participation rate, that did tick a little bit higher. That's good news for the economy. The underemployment rate as well, so this tends to be a good gauge of what's going on in the economy. It's those people that are working part-time for economic reasons where they would rather be working full-time. And you're seeing that tick a little bit lower as well. When you look at things like hours worked, this is good news as well because that moved slightly higher than the first reading we got from last month. And then when you look at average hourly earnings, this is what the Fed's looking at because this is what we talk about wage pressures. How much are wages rising? Are they rising where it's becoming an inflation issue? And right now, wages are up 3.8% on a year-over-year basis. That's matching last month's number. But on the month-over-month, it was a little bit lighter than we saw the prior month. So that means that we're not really worried too much about runaway wage pressure inflation here. When you look at where they were concentrated, you saw healthcare jobs. They did lead the gains. We saw the federal government reduce jobs as well. Now, this is the third consecutive month we've seen negative job creation for the federal government. Still not a lot, but again, we're starting to see some of this Doge effect in some of these numbers. Now, what does this mean for the market? We saw bond yields rise on this because we're basically taking out rate cuts now because this is a not too hot, not too cold type of report where we're still adding jobs. The unemployment rate isn't skyrocketing, and yet those wages are staying solid but not rising at a rapid pace. So this is good news for the Fed. It basically takes off any chance that they'll cut rates next week. There's a 3% chance, if you look at the futures market, that they will cut rates next week at their meeting. There's about a 30% chance they'll cut at the June meeting. We don't think May's on the table. June or July are still there on the table, but we've got a lot of more economic data before we get those numbers. So the equity markets have rallied on this as well. We've now erased those losses that we saw during the April rout that we saw on the market from the tariff announcement on April 2nd. So again, this is good news for the market. We'll take it. We'll take the win. And we'll be back next week with the Fed meeting. But don't forget, we're still in the midst of earnings season as well. So we'll be back with any big earnings reports that we need to discuss. That's all we have. If you'd like a further history of this podcast, you can go to marketswithmegan.fm. Thank you.